Good afternoon, everybody. Thanks for joining today's online event, where we are going to be discussing the EU taxonomy for existing buildings, and we have perspectives from both Ireland and Germany. My name is John Fingleton. I work with the Irish Green Building Council, and I'm very happy to have Rachel McGinley from CBRE Ireland, a director and the head of sustainability within CBRE Ireland. Just a note, we're going to have a Q&A at the end. So if you do have questions, please put them in the Q&A form within Zoom, and we'll be handling those at the end. And I'm just going to hand over to Seema now, who's going to introduce our German colleagues for this.
Yes, thank you very much, John. Welcome also from our side. My name is Seema Issar. I'm Senior Advisor Sustainable Finance with the German Sustainable Building Council. It's a great pleasure to be having this webinar or co-hosting this webinar with the IGBC today. And with us, we also have Anna Maria Sechel. She's a Senior Sustainability Manager with Realis AG. Realis is one of the leading German providers for real estate investments, especially for institutional investors. And with that brief introduction, back to you, John, for the introduction.
Thanks very much. So just a quick announcement about our conference next week, where we will be speaking about innovation and finance for greener housing. It's happening in the Gibson Hotel, and there are still some tickets available. And we would really, it'd be great to be speaking to people in person at that event if people can make it there. I know some people will, Seema will be there traveling over as well, so that'd be good to meet in person. So I suppose I was just going to give a brief overview of what the EU taxonomy is before Rachel and Anna Maria got into the detail of it, and Seema is going to speak about the DGNB tool as well. So the taxonomy regulation was introduced in 2020. So it's a classification system. So it's one of a range of new regulations brought in to, I suppose, help within the EU to achieve the Green Deal targets of 2050 net zero. So this will help to eliminate greenwashing from different industries, and one of those that we are particularly interested in is the new construction. And then within that, we are talking about acquisition and ownership today. So what the taxonomy regulation does, it defines what you need to do to be calling your financial transactions as green and looking for sustainable finance. So you have to substantially contribute to at least one environmental objective and do no significant harm to the other 5 environmental objectives. There are also minimum social safeguards at an organization level that you have to meet. And then this is all feeding into the Corporate Sustainability Reporting Directive as well. So both taxonomy regulation and Corporate Sustainability Reporting Directive are both trying to get finance to be driving towards more sustainable products. So who needs to look at the EU taxonomy? I suppose one of the big drivers of this that we're seeing is the corporations that are having to look at their CSRD reporting. So in 2025, that's going to be large companies with over 500 employees that are currently covered by the non-financial reporting directive, which has been replaced by the CSRD reporting directive. So that's very large corporations. And we've been told in Ireland that for 2025, there's in and around 30 companies that would have to report under the CSRD, and of those 2 would be related to the construction industry. Following that on in 2026, the net is greatly widened for who has to report under the CSRD. So that's going to be companies with 250 employees, a turnover of 40 million, or total assets amounting to 20 million. So that 30 companies, we have been told, is going to be 2,000 companies. So that's going to be a huge jump up in companies looking at the CSRD and subsequently the EU taxonomy reporting. And then any of the supply chain into these companies as well, we're going to start hearing about, are you taxonomy compliant? How do you, and so it's just going to become more and more common language within the industry. So what does EU taxonomy involve? So today, we're just looking at the acquisition and ownership. So that is for buying real estate and exercising ownership of that real estate. And the requirements for this are limited to just 2 elements: climate change mitigation and climate change adaptation. So you're trying to mitigate the emissions and the from your buildings, and then you're trying to adapt your buildings for that future climate change scenarios. So for climate change mitigation, there's different requirements if you're built before 2021 or built after 2020. So that 31st of December 2020 is the date. So if you're built before that period, you have to be Class A or the top 15% as primary energy demand. And we'll probably get into the detail of that in later discussions. And then if you're built after 2020, you have to be NZ minus 10%. You have to have thermal modeling of the building in terms of infrared of the structure, and then also global warming potential. And then for large non-residential buildings over 290 kilowatt hours, you have to efficiently be operating and monitoring and assessing any of that large plant. So that's the climate change mitigation requirements. And then the climate change adaptation, you have to perform a robust climate risk and vulnerability assessment. And then you have to screen the activities against the physical climate risks, and then an assessment of the adaptation solutions. And then the CRV, the climate risk and vulnerability assessment, should take the highest available resolution, state-of-the-art climate projections across the existing range of future scenarios. So looking at the different future scenarios, and at least a 10 to 30-year climate projections. And then the most important physical climate risks are adapted for new buildings and 5 years for existing buildings. So this is the wording within the taxonomy, I suppose, just abridged for presentation today. But then the detail of how that is incorporated into buildings is, I suppose, what we're still trying to work out, and to have good examples of this climate risk and vulnerability assessment, and to make sure there's a middle ground where we're not expecting too much work for real estate owners, but at the same time you are providing a practical guidance on identifying those risks and adapting buildings where practical, and particularly where there is a big risk to that asset, that there is a practical solution. And then I suppose, I think what could be key is just highlighting for the more longer term 30-year scenario that we are just providing good practical guidance to what the risks may be, and that people are comfortable with those risks and they're thinking about how to adapt to those risks. So that's just, I suppose, a very top level overview of my current interpretation, and definitely I'm open to correction from people as we kind of as different people look at this, there's different sets of eyes on the taxonomy, and it's really great to be working with our German colleagues, and as part of other groups as well. We're getting feedback from different European organizations to find out how different people are adapting it in their own countries. And with that, Seema, I'll stop sharing here and I'll invite you to share. We can see your screen there, Seema, but we can't hear you. No.
Okay, so now you should be able to hear me. Yes, perfect. Sorry about that. Thank you very much, John, for the overview of the criteria we have for acquisition and ownership. I think we as German Sustainable Building Council, our work with the EU taxonomy first started when the technical expert group had published the first round or the first proposal criteria back in 2020. And that's when we actually conducted our first study on the EU taxonomy and how we can implement it and interpret it in order to understand how project developers and also existing building owners can apply these criteria on the economic activities they are conducting. At that time, we had started with the first study in 2021, where we looked at with our technical system partners, both in Denmark, Spain, and Austria, at nearly 62 different buildings and 24 market participants to understand how the technical screening criteria can be applied to projects. And then a few years later, we did the same because the circular economy taxonomy criteria were published, where we looked at 38 buildings together with also with projects located in Denmark, Spain, Austria, France, Ireland, Switzerland, and Turkey, to understand how technical screening criteria can be implemented and what the different documentation methods could be. And from the experience we gathered in applying the criteria, which were then still in draft or in a proposal stadium, we developed our ESG verification for the EU taxonomy, where we basically have now looked into the criteria, the finalized technical screening criteria, which the European Commission had published, and where we basically check buildings on, we conduct the conformity assessment and check whether buildings are actually aligned to the taxonomy. And you can see in the screenshot from the Excel sheet which we've prepared is that we both have the technical screening criteria, but also give guidance as to how building owners can actually document their alignment and what actually the documentation basis could be. A very important factor here is also the data reliability, because obviously it makes a difference whether you have a full energy audit or whether you're only stating as a company that you're aligned, but you don't really have a well-founded documentation basis. So that's how the ESG verification for EU taxonomy came about. We've been doing that for since 2021. We've gathered a lot of experience with that, and I'm so happy that Anna Maria will be also talking about her experience in checking the compliance of projects later on. What we've done with the ESG verification is that we check the alignment of economic activities, not only in acquisition and ownership, but also with new construction and renovation, even though today's webinar will focus on the experience of acquisition and ownership. And we can see that the taxonomy has further evolved. It's not only climate change mitigation, where technical screening criteria are available, but also climate change adaptation, as John had already mentioned, the criteria. and the transition to a circular economy. And in Germany, we have the DGNB system, which is basically the sustainability certification system used for buildings. And we've, as a Green Building Council, we worked on showcasing the alignment between the certification criteria towards the taxonomy, so that clients or building owners who pursue a certification can at the same time also showcase their taxonomy alignment, thinking in process, so that you don't have extra work in following the regulatory requirement, but adding it on to certification, which companies are anyway already doing. And I think our cooperation with the IGBC, the pilot project we've started, is basically based on how can we as a Green Building Council check or verify compliance of buildings according to the EU Taxonomy. And at the end of our ESG verification, what we do is have a 2-page report where we showcase the project's alignment. We mention the economic environmental objective, which has been pursued, where the substantial contribution has been done, and we've also always mentioned the taxonomy or the economic criteria which has been looked at. And because the taxonomy is ever evolving, we also mention the what is quite important for reporting is that your taxonomy assessment is always accurate in the timing you have the sustainability reporting. So obviously there will also be a date of the verification, of the date when the verification result has been conducted. And especially if you remember the first criteria in the climate change mitigation option, where you have the top 15%, this top 15% of the building stock is obviously ever evolving as we renovate our existing building stock or as we build new construction buildings. So building owners will in future have to not continuously, but regularly reassess their buildings and whether they are taxonomy compliant. And on the second page, we have the detailed overview of the different taxonomy criteria, and then show whether that particular building was building aligned. And the important part to remember in the taxonomy is that even if a do no significant harm criteria, even if it's like a very tiny criteria which is not aligned, the whole building or the whole economic activity will not be able to be classed as taxonomy aligned. So it's very important to have to look into each taxonomy requirement and make sure that that an alignment is given. And that's so far from me, and I'll be happy to hand over now to Anna Maria, who will talk about her experience with the acquisition and ownership criteria category and how Realis is dealing with the taxonomy.
Thanks, Seema. Yeah, it's a lot about hands-on experience with applying the taxonomy regulation, so I'm very happy to share within the next 10 minutes or so a couple of the challenges we dealt with or still are dealing with while screening through our European portfolio for taxonomy alignment. So I just pinpoint some of the most interesting challenges we faced, and also a couple of notes on what type of practical approach we chose to break down maybe a lot of the regulation complexity and just start on the path with a very practical, even very simple couple of thoughts about it. So I'll just share with you in a second. Okay, so I'll just dive into the way we are dealing with the technical screening criteria. First stop checking the energy performance level of the property when you are screening under Article 7.7 of the Delegated Act on the technical screening criteria. So we are in the section acquisition and ownership of existing buildings. And we have to also check not only for the APC energy level of the property, but also for meeting specific thresholds or benchmarks. Seema mentioned the top 15 benchmark that we have to compare against if the property has an energy performance level of B. And the challenge per se is how to choose the right benchmark for it. What is the suitable choice for that? What were the main points that we focused on? What was really important for us in choosing this benchmark? First of all, it had to be something that is really real data driven. That has an extensive database covering ideally whole building energy consumption for all type of areas in the building. We wanted to have a benchmark that is covering various building typologies and also various countries across Europe, since our portfolio is pan-European. And in this way, accounting for various climate conditions and building standards across Europe. And of course, a rigorous methodology and quality control is also extremely important when relying on external data. So our choice was the DGNB ESG index. It's what we are working on right now. And we chose to use their top 15 benchmark for taxonomy screening purposes because it's, as I said, real data driven. It has a very extensive database of real properties and real consumption data behind. It produces 3 relevant KPIs, the energy performance KPI, primary energy or final energy, and also the CO2 emission, the carbon emission benchmark for buildings. So this is what we are working on right now, and we are very confident that it is a very good benchmark for screening for taxonomy reason. Next, we have also to check for an energy performance monitoring system for buildings, for larger buildings, non-residential. John mentioned that at the beginning. The challenge here that we identified right away is that without having a certain level of digital implementation around data collection and data analysis, there is basically no way to really consistently provide proof that there is a performing energy monitoring system in place in the building. So the challenge is really here for us about going digital with a property. So what we focused on was having a performing energy management platform in order to automatically collect the data, analyze the data from the property, consumption data, but also CO2 emissions, of course, monitor the data, and also apply an investment plan to work on reducing emissions and reducing energy consumptions. And everything is in one place in this energy management platform. This was essential to be able also to do this taxonomy screening. And secondly, we also focused on artificial intelligence for improving energy consumption reduction in the buildings themselves. And this worked as well worked very well for the buildings where we already rolled out with an external AI provider. And what we definitely realizes that there is always potential lying in every property to reduce energy consumption and to reduce emissions just by looking at the digital component of the property and improving that. And this is something everybody can try to unlock prior to rolling any major retrofit strategy for a building, just going digital with the property. And now I'm jumping on to actually, from my point of view, the most challenging part of the taxonomy screening process, physical climate risk and vulnerability analysis. First challenge we faced in assessing physical climate risks was to find a solution to assess climate risks at property or property address level. And ideally, we were looking for a one-to-fit-all solution, which meant we wanted to have simple, ready-to-use climate risk scores for every property in the portfolio at every location across the portfolio. Then we wanted to have, of course, a good coverage of taxonomy-related physical risks, and also a good coverage of all taxonomy requirements on future climate change projections, ranging from optimistic to highly conservative global warming scenarios. These were the most important criteria for us, and we decided to use a tool provided by Munich Re. It's called Location Risk Intelligence Platform. And in this way, we managed to really find a solution to fit across our portfolio, no matter the location, no matter the property type. It is also possible to produce a full portfolio climate risk assessment or only focus on specific property addresses across the portfolio. We get a consistent, uniform climate change score at property level, also based on natural hazards, past observation, but also based on climate change projections for the future. This was our choice. Second challenge with regards to conducting the vulnerability climate assessment. It's even more challenging than dealing with the assessment of the climate risks, climate risk itself, because under the taxonomy, you have to look, at least theoretically, at 28 possible individual risks for each property, which may theoretically lead to 28 possible individual vulnerabilities that you may identify across your portfolio. Of course, you can exclude some of the risks as not being immaterial at all for a property, but still there is a lot of potential for a lot of different individual type of risks and vulnerabilities. Then there are diverse building typologies and diverse micro locations that you have to work with. And there is really no way around it but to deep dive into the asset, or at least we didn't find a better way to standardize the process. This is actually something that we have to do going property by property. You have to get to know your asset. You have to go back to the basics sometimes and look properly at the micro location, at technical structure of the building, gather a lot of data, work a lot with your asset and technical manager and property manager. Still, there is way to standardize it, to simplify it. What we did is, for instance, define one standard checklist per type of physical risk and working our way, starting there, assessing vital building criteria. We asked very simple questions, a lot of binary questions, yes or no, about what we thought were vulnerable spots in the building. And we also rely on expert judgment, and that's really qualitative judgment and not only numerical data to arrive to the final assessment of a building being vulnerable or not, because again, we didn't yet find a better way around it than to really do this deep dive and look very properly and very individually at each asset. And actually, that's it. A very quick run through the main challenges we face on a day-to-day basis dealing with taxonomy screening. And happy to hand over to my colleagues for the next.
Thanks very much, Anna Maria. Rachel, if you want to share your screen now.
Yep. Okay, so hopefully everyone can see that. So yeah, I'm really happy to be here today. The EU taxonomy, that's something that's I found really interesting, trying to define standardized ways of calling it an asset or a building green across Europe is really useful for our clients at CBRE. We work across all regions, and one of the things that's been really interesting is, well, I'm based in Ireland. I talk to my colleagues in Germany and France and across the region a lot. The way that it's a consistent definition system, but the way you actually apply it in different countries can be really interesting, both from what data is available, what legislation's in place, but also just practically what's common practice in this country, what do we typically do, what documents do we typically have. That sort of adds to the differences between the countries as well. So it's been really interesting to work through that. I just can't find my arrow. But I thought before I dived into some of the detail of applying the taxonomy in Ireland, it might just be useful to go back to kind of first principles, what the taxonomy is trying to do. And also, I suppose, from a commercial point of view, why is it impacting the commercial real estate industry from an owner point of view and from an occupier point of view, particularly with the implementation of the CSRD. There's corporates and building occupiers who own assets that will have to report on this as well. It's not just the investment community that will need to look at the EU taxonomy. So taken from the European Commission's website itself, and the idea of the taxonomy is it to allow financial and non-financial companies to share a common definition of what is environmentally sustainable. In the real estate industry, we sort of have go-tos of the sustainability rating tools, but the idea is there's lots of companies that work across asset types or activity types to be able to say with confidence what is sustainable across all asset types and all activity types is really useful to all our stakeholders. And having that common definition, the European Commission finds it's really important role to help the European Union scale up on sustainable investment, protect investors and protect them from greenwashing. You know, that previously there's lots of ways that you could describe a building as being green. The EU taxonomy really sets it out in stone. What are the requirements? What's the baseline for sustainability in real estate? And the idea is it's going to become a common language. It's going to help companies talk to each other about what sustainability is and really just set a line in the sand of what can be called sustainable. And things like LEED or net zero carbon can be on top of that, but it's a way of creating a common language of what is sustainable. And so, yeah, as I mentioned before, we work across Europe, and it's really interesting to see how the EU taxonomy is being applied in different countries, the level of interest it has from our clients, both investors, occupiers, people buying and selling buildings, but also how it gets applied and how easy it is to apply in different countries. And the European Commission's done some research on how the EU taxonomy is being applied, and it's really great to have our German colleagues here on the line today, because Germany is one of the countries that's most advanced in terms of EU taxonomy compliance. It's in 2023, it was the company that reported the most financial activities, not just real estate, but across the board. It had the highest value of EU taxonomy compliant activities, followed by France and Spain and Italy. And from our experience, those are the countries I'd find too that ask us the most questions about EU taxonomy compliant buildings when they're looking to invest or occupy in Ireland. And it really does, in terms of our day-to-day work at CBRE, it really does impact every sort of element of the property life cycle. In terms of transactions, our clients buying and selling buildings, they're definitely asking questions about, is this building EU taxonomy compliant? How can I make it compliant? How do I report it? How do I talk to buyers and sellers about EU taxonomy? If you're an asset manager, you want to, as Anna-Marie told us, they want to ensure that as much of their portfolio as possible can be described as EU taxonomy compliant and get towards that. So there's things you can do as an asset manager to have more and more of your portfolio be compliant. When you're thinking of constructing, refurbishing, or fitting out a building, there's retrofits you can do to make it work towards taxonomy compliance. And I think any projects that are going on at the moment within sort of our company, we always recommend clients think about the EU taxonomy and whether it complies with construction, renovation, or even just acquisition and ownership in the long term. That's a really good thing to think about now. There's things you can do during a retrofit project that would be harder to do retrospectively in terms of the information. The governance of the companies we help with ESG reporting, there's a really big focus on demonstrating the compliance and how much of your portfolio is aligned with the EU taxonomy. And then selling as well, preparing a building for sale. Have you got the right information? Is it in an easy to read format for your potential investors? And also making sure it's verified and high quality information as well. And I think the German Green Building Council's initiative of having third-party compliance, so similar to LEED or BREEAM or DGNB, having a third party say, yes, we've reviewed this, we think the documentation is compliant. I think that's really, really powerful and will help understanding of the EU taxonomy across the industry. So yeah, definitely, I've been in Ireland now for 4 years, and the amount of interest in ESG and sustainable buildings has really ramped up. It's something that everyone gets asked about now. So we do some research in terms of what investors and occupiers are looking for. We found that 81% of investors are adopting ESG criteria in their investment decisions. And as the EU taxonomy becomes a key definition of sustainable, that's something that the majority of our investor clients will be looking for. And then, you know, we are in a business. 62% of respondents to our survey found that they were willing to pay a premium for ESG compliant assets. So there's the business case for complying with the EU taxonomy too. And we find year on year that the focus on ESG has intensified from investors. Reducing energy is a priority, and the way that you need to demonstrate your compliance with climate mitigation is a big part of the EU taxonomy if you choose that pathway. The emphasis on well-being can be included in how you look at your climate risk assessment, and also some of the criteria within the criteria for new construction. And a key one is, and we find that in the transactions we're involved in, that lack of data is a barrier to achieving ESG goals. Not having enough information on a building, maybe you don't have historical energy data, up-to-date BERs, climate risk assessments, you don't have a LCA that was conducted of a retrofit project a couple of years ago. There's good work that's being done that sometimes isn't captured in the data and the documentation, so that can be a barrier. And I think compliance with EU taxonomy, making sure that you've got all that data, that it's high quality and it's available, is of real benefit to all our stakeholders. And from occupiers as well, and I think this will become more and more important with the CSRD, that occupiers are now looking to EU taxonomy as well. We've found from our research that ESG is not just a nice to have, it's becoming more and more important. And year on year, the focus on ESG and occupiers looking for new space to occupy has increased year on year. And also from occupiers, there's an increase year on year amount of occupiers and landlord investors looking to set net zero carbon targets and net zero carbon pledges. And again, the EU taxonomy and other frameworks can really help demonstrate that you are complying and meeting a minimum level of performance for energy and carbon. So from our point of view, I talk about this all the time with our clients. I'd really like to see wider adoption and understanding of this. From my point of view, the EU taxonomy provides a really clear definition of what is sustainable that can be applied at all stages of a building life cycle, right from construction, acquisition, retrofit, operations, and selling at the end of the life cycle. We're seeing that it's being adopted by European investors and occupiers, so from all countries all across the region, and it's becoming a common benchmark of what is a sustainable building. And I think it can be more broadly applied than BREEAM or LEED. It's becoming just sort of a point of entry in terms of sustainability. So yeah, we'd like to see wider adoption of it and more understanding in industry of the EU taxonomy. So we've been working with some clients both through the Irish Green Building Council and just more generally in terms of buying, selling and owning buildings, the application of the EU taxonomy in Ireland. And definitely there are some nuances from country to country. So the key things if we're looking at acquisition and ownerships of buildings is the building energy performance, climate adaptation and vulnerability risk assessment, and a key one is building energy controls. So if we start with building energy performance, there's some, I think there was a slide previously, there's two different ways of looking at it, whether it's a newer building or an older building. If it's an older building, it needs to have a BER of A or be in the top 15% of BER performance. And the Irish Green Building Council and SEAI are looking at defining what that 15% is at the moment, because at the moment it's very easy to demonstrate that a building has a BER of A. But if you're maybe a building that has a BER of B1, B2, it's possible that it does fall within that top 15%. So having some clarity around that in Ireland will be really useful. And I know the Irish Green Building Council are working on that at the moment. But the other challenge is post-2020 for newer buildings to be EU taxonomy compliant, they need to be 10% better in terms of energy performance than net zero energy, than the NZEB regulations. So sometimes for buildings that have been built more recently, but without EU taxonomy in mind, they'll be NZEB compliant, but may not reach that threshold of being 10% better. So that's something to sort of look into more closely through the energy modelling that's been done for that building. Another key one that Anna-Marie mentioned is climate adaptation vulnerability assessments are something that are very, very useful. There's been huge floods in Spain, there's floods in Germany, sort of in the past year or so. It's something that really is happening in Europe, the fact that our climate's changing and we're being exposed to more and more hazards. So, but it's typically not something that's done in Ireland all that much. So getting a greater understanding of climate vulnerability risk assessments and how they apply to your buildings is really valuable. And the key risks in Ireland would be overheating, particularly for residential assets, flooding, very wet in Ireland, and then increased rainfall as well, and understanding whether your buildings are fit for future in terms of that and how they can adapt for those future climate impacts. The other one is the building energy control. So there's a line within climate mitigation about larger buildings having good energy management and performance systems within the building. And that's aligned quite well with the BACS regulation that's coming into effect in 2024 and 2025 in Ireland. So that's something I've got a slide on in a couple of slides. But that's something that I think all our clients should be thinking about anyway, as having good energy control of the building can reduce your bills year on year and reduce your carbon emissions. And to a certain extent for larger buildings, it's coming into regulation in the next few years anyway. So I think Anna-Marie covered quite a few of the things that I was going to talk about in terms of climate change risk assessments. So the key to this is really having a good start with your data. There's publicly available data. There's some from the Met Iron and the World Bank. But again, it can be really challenging to get that data from lots and lots of places. We use Munich Risks too, and there's other sort of paid for services like Climate X and 24/7 as well. But it's really handy to have that data, climate data from a reliable source in a way that's really easy to use in climate risk assessments. And I think in some ways they can sound a little bit academic, but if you go through the process, it really can be a way of improving the performance of the building. And there's just a couple of steps to it. So first of all, you would identify the climate hazards at that location. Is it near a river? Is it somewhere where the rainfall's likely to increase or temperatures likely to increase year on year? And then at that location, determine the exposure of that building to those risks. So there might be some buildings, it might be near to a river, but it might already have flood defenses. So that in a way, that building might not be so vulnerable to those risks. So coming up with a sort of methodology to determine the level of risk at that site. And if the risk is found to be medium or high, to then think about mitigation or management of those risks. So, but those mitigation and management measures might not necessarily be expensive. It could, especially for the 5 years that's required by the EU taxonomy, in some cases, it could be through asset management rather than CapEx. For example, you might have a building with a flat roof that's exposed to more rainfall. There is a chance that those flat roofs could become overwhelmed, but a way of managing that could be through just asset management, making sure the drains are cleaned regularly rather than investing in additional drainage. So being clever about how you manage your asset and think about how risks could be managed through operations as well as sort of spending money on the building can be a good way to look at it as well, particularly in that 5-year timescale. I think, oh yeah, the other one to think about, and there's really good information available on this on the SEAI website, is that in terms of building controls and automation and the line in the EU taxonomy that asks you to have good energy management of larger buildings, there is legislation in Ireland and across Europe coming into force in the next 2 years about larger buildings requiring to have building controls and automation. It'd be really good. It's really good to have a look at the SEAI website, which talks about how to apply this in Ireland. But it's about buildings having BMS systems that are capable of continuously monitoring energy use and performance, that they can benchmark energy performance, and that in some way it can feed back to the building to control it. And the control of the building is automated rather than someone requiring to turn a temperature up or down or change a set point. So I think lots of buildings over the next couple of years will need to assess this anyway, but doing this in alignment with the EU taxonomy can sort of help the amount of buildings in your portfolio that are compliant. And for larger buildings as well that are under the more recent version of climate mitigation, because they're newer buildings, are required to do an embodied carbon assessment or a whole of life GWP assessment. So that, and again in Ireland, that's something that's not typically done unless you're going for a LEED certification, and it's one of the credits in there. It's something that is much easier to do at point of construction or shortly after, while that data's all still there. So as part of the EU taxonomy, one of the lines is it requires a life cycle global warming potential, that sort of carbon equivalent assessment of the building resulting from the construction, that it's calculated for each stage in the life cycle. So that's essentially a whole of life carbon assessment, needs to be aligned with the EU levels framework. And yeah, again, we would recommend that that's done during construction or shortly after, while that data is still live and you've really got access to the quantities, the EPDs and the materials that go into the building. The final thing I wanted to talk about was that in Germany, there's really good alignment between DGNB and the EU taxonomy, and they've worked towards getting there. In Ireland, the tools we'd use more frequently is LEED or BREEAM, probably more specifically LEED. And both of those rating systems have taken steps towards demonstrating EU taxonomy compliant, but neither of them do it in their entirety just yet. LEED has produced a document that goes over their alignment with the EU taxonomy, and I suppose if you're commissioning a project which might go for LEED, there's some sort of double benefit you can get in terms of EU taxonomy compliant and getting LEED credits. If you look at the life cycle impact reduction credit, which is essentially a whole of life carbon assessment, and there's pilot credits for EU taxonomy alignment and climate risk assessment. So that's something you can look together at. In some cases, the methodologies are slightly different, but it's while your consultants are doing that work, they can kind of look at making sure that their reports align with both rather than just one. And then BREEAM has also done some work around alignment with the EU taxonomy, and there's a number of credits. And BREEAM in use is becoming a tool that's more and more popular in Germany, no, not Germany, in Ireland. And there's a number of credits within that system that can go towards EU taxonomy compliant. It doesn't do the whole thing, but it does get you some of the way towards EU taxonomy compliance. And again, it's really good to have that data third-party verified. I think it adds to the quality of the data that someone else has looked at it. So one thing I just wanted to sort of show everyone was that EPRA has done a really good document on EU taxonomy and how it applies to real estate. Sometimes thinking about how it applies can be, there's lots of criteria to think about. Where do you start? There's a really good flow chart on how you could think about applying EU taxonomy to an asset or a portfolio of assets. Just where do you start? What financial activity is it? Does your building have a good enough EPC or BER? And then you can follow through this flow chart to see whether you get to compliance or not. And as Seema mentioned, unfortunately, you answer one question no, and you're sort of not compliant. But if you get to the end of the flow chart, it's a good way of having a look at whether you're EU taxonomy compliant. So I think there's been a lot of information in this session, and I think there's follow-ups that could happen on, particularly on climate risk and vulnerability assessments. And I think the energy benchmarks for EU taxonomy as well. There's been some questions for that in the chat. But if you're interested in knowing more about the EU taxonomy and how it applies to your business and your assets, Have a look at the taxonomy compass that the European Commission has produced. There's loads of really good information there, and it sets out really clearly what the criteria are. And there's additional information on that website too. If you're looking to see how much of your portfolio is EU taxonomy compliant, first of all, start with your BERs and your energy performance. You can see then which buildings aren't compliant, which ones do you need to do more work on. Have a look into climate risk assessment. It is a new topic in Ireland and across Europe, but there's lots of good resources online, and sort of get to thinking about what sort of climate risks might impact your assets in Ireland. If you are commissioning any construction works, request embodied carbon measurement. That's something that's much easier to do when you're in a construction project rather than afterwards. Understand your exposure to upcoming BACS regulations, so have a look on the SEAI website for that. And a final one, if you're interested in finding out more, support the Irish Green Building Council's pilot programme.
Great, thank you so much for all those tips, Rachel. We've got quite a few questions in our chat, and I'm just going to take, I'm going to take two just to make it a little quicker on the general side. There was one question as to the taxonomy defines built before, and whether that's the practical completion date or the planning permission was the date when the planning permission was granted, and it's actually the second. So it's the date when the planning permission was granted that you determine whether you're looking at the new construction criteria or the acquisition and ownership criteria. A second general question was whether you can choose to comply to and substantially contribute to climate change mitigation or climate change adaptation. And it is the case, if you choose to substantially contribute to, let's say, climate change mitigation, you would have do no significant harm criteria in climate change adaptation. But basically, as an building owner, you can choose which environmental objective you want to contribute to. We've also had a few questions on the climate change mitigation. There was one question, maybe Rachel, you could take that on. How is NZEB defined? Are there like specific figures or numbers? Maybe you can answer the question for Ireland. And
yeah, so NZEB is the definition of NZEB within the building regulations. So that's complying with Part L. Your M&E engineer. Yeah, so there's not a specific number. It's a way of through the Part L building compliance, your buildings will be compliant with NZEB, and that's something that your M&E engineers would model for you as part of the construction process.
We are similar actually in Germany, where basically NZEB is the European regulation, and then at the national level, the national regulation will define how NZEB is defined for Ireland, for Germany, etc. We had another question. Anna Maria, you had mentioned for the top 15%, you use the DeepKey benchmarks. DeepKey has, I think, 6 different building types. What do you do when the building typology of a building you are looking at does not fit into DeepKey's building typologies? Do you have a different method you use? Maybe you can.
Not really. I mean, DeepKey is using 6 different typologies, if I'm remembering correctly. So I think they provide logistic, so industrial, office, housing, hotel, health care, or health and retail. So we usually do fit in at least one of the 6 typologies with our own buildings across the portfolio. For existing commercial building in use, if you really don't find a perfect match, which really reads retail or healthcare or logistic, I guess you would just take the best, the one type that maybe best approximates your use, or a combination. I mean, if you have like multiple typologies based on the actual use of the building, I would average over those. So if you have a mix of hotel, office, and retail, then why not build an average based on the actual allocation in the building?
One thing I'd note on that, we've had a look at DeepKey as well. There's not, DeepKey has split their benchmarks out into countries for some of the larger countries, but it doesn't include Ireland as a single line at the moment.
Yeah.
So I think that might be a barrier to using that that methodology in Ireland, I'd say, unless we could persuade DeepKey to include Ireland, but I don't know how many assets data are collected for in Ireland at the moment in DeepKey.
Probably the database coverage is not sufficient yet. We talked to DeepKey exactly about this topic because we have Irish buildings, and we are also screening them for taxonomy reason. And we did a bit of a deep dive into the methodology, and they explained to me that the UK benchmarks can be used for Irish buildings because the way the climate conditions are modeled into their ESG index, they apply basically the same climate conditions that they find in UK. So the first variable is climate conditions for insular rather than continental buildings, and that should be applicable to Ireland the way it's applicable to UK from a weather perspective. And then regarding other variables in the model, I think it's about also thermal insulation of buildings and the way building standards works for thermal insulation in UK and Ireland. I'm not a specialist, but DeepKey explained to me that there are similar parameters for Irish buildings and UK buildings, so they don't see a problem taking UK benchmarks and use them for Irish buildings because these parameters that determine the benchmarks are very similar between the two countries.
Yeah. And the other way that we've been looking at benchmarking that in Ireland is using BER certificates, because we do have a national database to get the data of all those BERs and the primary energy demand that those BERs are associated with. And yeah, I think that's the other way we can look at it in Ireland. Do you have a BER of A, or are you in that top 15% in terms of energy demand as defined by the BER database?
Okay, and this is a publicly accessible database, or you have to have the BER.
Do you want to say anything about that, John?
I think, yeah, exactly.
Yeah, I think like we're going to try and make that we have access to it, but I suppose how widely we can share it, we have to kind of agree with SEI who manage that information.
I think it's also basically part of this pilot phase of trying to understand how you can implement the taxonomy criteria in the Irish context and on the whole verification process we're working on. We had a few more questions, and just with a look at the time, and we're also coming to a close, but I wanted to take two more questions actually. It was more based on the climate change adaptation criteria. One was on the resolution of data available when you're looking at different climate projections, on what resolution, like how high is the resolution you can get for the projected climate change scenarios, and also how do you get access to weather files and GIS data sets for when you're looking at future projections. Maybe first, Anna Maria, you could just say what your experience is with Munich RE, where you're working on, and then Rachel, you can add on what kind of data sets are available for Ireland.
Okay, so the product of Munich RE is based on of course, a very powerful model that they used traditionally as an insurance company. So they have all the historical data sets available at micro location, and they are able to provide a very high resolution based on street number, not only on postal code area. I think I've seen in the FAQ chat also a question on how high the resolution may be when analyzing the climate risk. So they have the best possible, I think, historical data available if you are going to an insurance company. And I think not only Munich Re is providing that, but other insurance companies as well. They have the best data, I think, that you can find in the market at very micro location level. And then regarding future projections, I think they offer a lot of different time ranges, 30 years to 50 years to 70 years to the year 2100. And then ranging from very optimistic global warming scenarios, 1 to 2.4 degrees, up to catastrophic scenarios like up to 6 degree global warming. So they have a very wide range of possible future scenarios, and also a very good set of historical data to be able to provide that kind of climate assessment. I hope that's
perfect.
helping.
Rachel, what's your experience in Ireland? Do you have a lot of accessible data where you can conduct the climate risk analysis?
No, so we've started to use commercial databases rather than what's publicly available, and we've used Munich Re, Climate X, and I know there's 24/7 as well. Some of those are actually sort of paper report now, so they're a little bit more accessible. You can just download one report rather than needing to subscribe, so that's really good. But we've found that the resolution of those services is better than, say, what you can get from the Met Iron here, which tends to report things in terms of counties or locations rather than buildings, or even data from the World Bank, which is a little bit less of a resolution as well. We found that Munich Re is really good in terms of having the highest possible resolution.
All right. So I think there are still some questions in the chat, but with the time, unfortunately, has come to an end. I think both John and I will. I don't have. Feel free, if you have any open questions, to reach out to either one of us, even after the webinar, and we'll be happy to help in implementing both in Ireland or Germany, if questions do arise. And I thank Anna Maria and Rachel, you both, for sharing your knowledge, and thank you for your attention. Thank you.
Thanks very much, everybody.
Thank you.
Thanks, Rachel, Anna Maria.